and good morning, and welcome to the VSA Capital 5 Minute Morning Miner. It's Thursday, May the 15th, halfway through the month. Good morning, Paul. How you doing?
Good morning. I am fine, thank you.
Excellent. Now, I'll just sort of kick off. There's a big article in the FT today. Robert Freeland, who obviously is one of the gurus in the mining industry, saying that the defense industry has misread the need for critical metals. Well, he's right. We've been saying that for ages. Anybody listen to this regularly will know that we bang on and on about it. God, we've become boring. Me boring? No. Anyway, but obviously the one that we really like, which is a really critical defense metal, is tungsten. You haven't worked that out yet. You're not listening properly. But what's interesting about tungsten, we've actually had a few more tungsten companies wandering through our office this week. We had Guardian Metal Resources, which has got it's the Mount Pilot in America, and that was a really interesting chat we had there. I think they are going to go from sort of a back runner to a pole position almost. I was very intrigued by what they're up to. Obviously, we know that Almonte's about to open up their South Korean plant, and you're going to tell us one of our favourites today, Paul, about EQ.
Yes, that's right. EQ Resources, the Australian and Spain tungsten producer, they have received an extension on its repayment of their credit facility out to the end of the year, which is good news there. And that's because the Saloro subsidiary, which is the Baruca Pardo mine in Spain, its operating performance has improved very nicely, in particular over the last 6 months. And as a result, now uh, regular and formal banking debt negotiations have reopened in order to see about conventional debt providers replacing this credit facility, and that all due to the outlook of EQ having better financial performance. So, good news there.
It's nearly always good news, though. It's a fantastic company, absurdly cheap, but there you go. Right. We also had some results out at Cornish Metals today. I think most people know that I'm getting more and more excited about what's going on down in the southwest of England, Cornwall, and a little bit of Devon. I mean, final numbers or numbers for Cornish Metals aren't that important, really, in as much as it's still in the development phase. But the good news is obviously they're well funded, shall we say, at the moment, and they are getting on and doing it. I have to say, I think that it's looking quite attractive, Cornish Metals, but of course people do know that they need more funds, and it's the old Lassonde curve that gets in the way of the share price performing. But Paul, have you got any comment there?
Only to say that they reported a quarterly loss of 3.2 million Canadian, but they are sitting on almost 90 million of cash. So, for the foreseeable future here, anyway, they are certainly well placed in order to move this reopening of South Crofty right along here at this stage. So, I suppose there'll probably be some additional funds that will be wanted for working capital needs as the plant gets in construction and underway for and mine development as the old workings are re-prepared for new operating phases.
Yeah. Just to stress that cash is in dollars, so in sterling it's not quite so much. And of course, the issue you have there, I mean, they're spending a lot of water, obviously, dewatering, so that the Red River is no longer the Red River. It's now a see-through river. It's the water is completely cleaned up. It's amazing. And the plant is actually quite expensive because it's going to be sort of semi-submerged, so it doesn't cause noise and have environmental issues. So it's a little bit more expensive than normal. But yeah, they're cracking on with that. Now, talking about sort of another metal that we are very interested in. You were bullish. I was always very bearish, and I remain very bearish. And that's vanadium. Obviously, people know that we follow the vanadium market very closely because of our involvement with Invinity Energy Systems. But Largo had some, I think it was Q1s overnight. The TSX listed. Any comment there, Paul?
Only to say that their results are very clearly showing just how poorly the vanadium price is here, with revenues down below 30 million versus 42 million on a year-on-year basis, and their net loss for the first quarter came in at 9 million. So the issue, of course, being that they do produce, it is the best probably commercial scale operation out in the world right now, perhaps outside of China. But the bottom line is if you're losing $9 million every quarter, it is not a sustainable business.
Yeah, I look at the price, but I mean, unfortunately, the price is going to stay low. Actually, there's some really good vanadium mines that are private down in South Africa. A lot of them are actually owned by the Chinese, and they produce some really high quality vanadium. Obviously, we know that the old Bushveld and the Bushveld complex, which has got a lot of vanadium in it. Bushveld obviously overpaid and got itself into financial difficulty and went. We used the phrase belly up. I think I would nearly said another phrase, not polite at this time of the morning. But actually, there is plenty of vanadium around because obviously vanadium price tends to be driven actually off Chinese steel. And the Chinese steel market is clearly not at all healthy because they've done so much construction work and now it's all overgeared and the construction work is all stopped. So that's why really the vanadium price is going to stay low. But I do still believe in vanadium flow batteries. I think they are going to take off. It's just a matter of time. We don't want to get too overexcited at this stage because it's not quite the time yet. I've probably been overexcited too much over the last 10 years. So I'm just pausing a little bit. We'll get going again later. I see that on the litigation stocks, GreenX Metals has done a suspension to do a pending a fundraise out in Australia. And just to note that I am expecting Panthera Resources, which is who we act for in the UK, to release their statement of claim tomorrow. And I think that will create a lot of excitement. But let's see what they say. Now, also just going back to one of what was one of AIM's really hot favourites, but it's gone completely quiet. A little bit of news out, I think, this morning, Paul. Asiamet.
Yes, Asiamet had a little bit of news out here that they had gotten a final technical approval report released for the BKM project, and that technical approval report now essentially paves the way that they can open the data room in order to have the potential financiers for the BKM Solvex copper mine and plant in Kalimantan for financing discussions. So that was a key thing that had to be completed to be put into the data room.
Okay. Look, there were a little few bits of news. East Star, Pensana. Do you want to mention either of those, Paul?
East Star had their geophysical results back concerning their license there in Kazakhstan. And specifically with that, two really key anomalies that they want to get the drill on, and they expect to mobilize that on those two targets in the next 2 weeks. And there is some historic information already on one of those targets in particular that indicates that it has grade, both copper, lead, and zinc at pretty shallow depths. So I think they're feeling pretty confident that they'll be able to drill out some resource here.
Okay.
And then on Pensana, the other story there was that they had the Laganjo finance that was announced in March. It has been agreed for terms for Pensana to convert equity of $15 million into shares at a conversion price of 24p. And the first 25 million equity tranche, for the delivery of that for the construction finances, the timing of that has been agreed as well.
Yeah, I see that Saudi Arabia is also announcing sort of plans that it wants to become a major hub for rare earths. So that could change the market slightly in rare earths. And actually, just finally, I noticed, I saw a report, I think it was Benchmark Minerals or someone, that they think that the lithium market will be oversupplied for the next 10 years. Again, I think anybody listening regularly knows that I've felt that way, that lithium price is not about to suddenly take off. For 10 years, that is a long, long time. But these sort of levels, for instance, most of certainly Cornish lithium and the brines just don't work. You need to have a massive resource to get a lithium project to work down at these sort of prices. And we've always said, and we've said this, we've been talking lithium now for over 10 years, that, actually probably in the next 5 years, only 2 or 3 major projects will actually get up and running and into production. Now, that doesn't mean to say there won't be some others. One obviously we follow closely is Premier African Minerals. They've got their Zulu lithium. So actually, we're that can get running. I think there's various bits of news going out on that. The plant is all built; it just needs a bit of a tweak. And there are always going to be exceptions. We follow clean tech lithium, but again, they've got a very good resource. They just need to get the DLE right, and they will do, I think. But it is a tough space. Any comment on that, Paul?
Only to say that we're reaching that point now where the mining industry can deliver the actual raw material. Now it's a question of having enough processing or midstream processing in the right places globally to match the politics.
Well, I think, that's absolutely spot on. And China still dominates that. And that's where people like Saudi come in if they start throwing money at it. We obviously have Alchemy Capital in the UK who's trying to build a plant up at Teesside. We will wait and see on news on that. It's tough, though. It's very tough. All right, I think that's enough. So back tomorrow. Thanks.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.